All right, man, we're
All
live.
right.
We are rocking and rolling today on this beautiful Thursday morning.
It's Thursday, the 13th of April, is the morning edition.
Yes,
Good day
sir.
to
And
you.
it is a beautiful morning indeed. For me, it's weird that and I shouldn't be this way. And I know, we say try to keep your emotions out of investing, but man, when I wake up and see that 30 tag in front of Bitcoin, it sure does make me feel good.
I'm in the same boat, and I would say that there's a difference between having or being able to sit back, make an observation, and project your good feelings onto the price action or the current price, I should say. That's one thing. There's another thing where you're taking perhaps one might speculate in the crypto markets by taking heavily leveraged positions, either long or short, and then in the process of doing that, sitting there watching the price action with an active trade, biting the nails, and perhaps letting the emotion drive the mouse clicks to the extent that you get chopped to pieces, which is what a lot of, unfortunately, this is real life. This is how the exchanges make money when people get in and out of trades very quickly, and they get paid on both sides. Every time you click that mouse, the exchange makes money whether you did or not. So I definitely in the same, or I definitely share this feeling of, I mean, I don't know how to describe it other than like a nice feeling of looking at the price, and here's what I'm getting. Here's what I'm driving toward is that we had massive pressures last year, all sorts of FUD, all sorts of bad actors, all sorts of horse puckery, and people doing just downright wrong things. The FTX thing by itself should have been enough, but there was
We'll
everything
uh,
else on
we'll
top of it.
we'll come to FTX here in a bit. They
Uh,
might be coming back online, and for the life of me, I don't understand why anybody thinks that's a good idea. But hey, here we are. But yeah, so I think what we wanted to start talking about today was Ethereum, and Ethereum's looking like it's right under 2,000. It's had some nice price action, but we had yesterday a big upgrade to Ethereum, and let me pull up a tweet from Chris Berninsky, and he said, "Looking forward to what happens when people realize the ETH Shapilla dump FUD was a nothing burger, and everyone wants to stake more ETH since the process has been de-risked." And we talked about this in the past, and I didn't understand the idea that people that had staked Ethereum for 2, 3 years would all of a sudden decide they want to wake up and sell it all, right? Because these are people that had long-term conviction in the project, but that was the idea floating around Twitter, that there'd be all kinds of sell pressure on Ethereum because everybody that had staked Ethereum that can now unstake it would all of a sudden decide they want to sell. And that doesn't look like it's happened.
yeah, quite the opposite. It looks. I mean, using basic math, if you're looking at or using basic supply and demand characteristics, or factoring this into your thinking, one might one doomsday scenario type train of thought would be if the ability to unstake, which I'll make the analogy real quick, is that for those that might not understand what staking means, it's simply if, like, for example, if you took $5,000 to a bank today, made a deposit, and said, I'd like to open a certificate of deposit with a 24-month term, for example, at a specific interest rate. And when you do that, what you're doing is you're agreeing to lock up your cash in this investment, or this vehicle called a certificate of deposit that is going to provide yield to you in return for you providing the capital in the first place. The bank's going to take that money and use it to do other things. And what you're agreeing to is that for a period of X months, in this case, 24 months, that you're not going to be able to withdraw that. Let's say that you get into a financial pickle, and you come back to the bank and say, "Hey, I need to, I need to withdraw that money," and they say, "Oh, sorry, can't do that. We're only 7 months into the 24-month period." That's effectively what the when you staked your Ethereum prior to the Shanghai unlock event, as I think of it, the risk was simply that you were staking your Ethereum, you were locking it up, and there was no ability to unlock it in the short term, meaning there was no time horizon necessarily, other than folks at the Ethereum Foundation or whoever works on Ethereum were speculating about when they were going to release this, quote unquote upgrade and make the change to the network so that Ethereum could be successfully unstaked, which it until yesterday was not possible. So that the think of it like a certificate of deposit with a term, except there was no term prior. Now, the de-risking element is simply that now that people can stake and unstake without any, I guess, hindrance, it really, quite frankly, the way I see it is it opens up the opportunity for more people to take fiat money, put it into Ethereum, stake it, and earn a yield, and make it becomes a more widely accessible, productive asset, in my opinion.
And you know who loves that?
We do the old Wall Street.
That's exactly right. So it'll be interesting to see over the coming months and years how this evolves, because this is a relatively new uh, feature, right? Like, there's other crypto protocols that allow staking. And something interesting about Ethereum is that if you look at like other staking platforms like, Solana, uh, Cosmos, Cardano's, all those stuff, and the percentage of tokens staked was like 60, 70%. Don't quote me on that, but it was much higher. With Ethereum, only 15% was staked. So I think what we'll see over the coming months is that a higher percentage of Ethereum actually gets staked because it's been de-risked, right? And that's something, as somebody who holds Ethereum, I go back and forth between, look, say we get another bull run. Do I, and this is an interesting question to think about, say Ethereum gets to 10,000, do I sell it, or do I just stake it and then, you know, clip coupons, right? Like, that's the question, right? Because you've got to look at all this stuff and say, okay, well, what can I do with X amount of cash that I'm going to get from selling this Ethereum? Or do you look at Ethereum in the kind of like in through the lens of Bitcoin, in that I don't know that I really want to sell this asset, right? And the fact that you can now get a liquid yield by holding it is very, very attractive. And it's something just to think about. I think a lot of people will have that same thing. Now, what I'm leaning towards, because it's crypto, right? And because my main thesis is that I want to buy and hold Bitcoin forever. And I'm going to use other crypto tokens to generate income and cash. I may just say, look, I'll take the cash, and worry about the yield later, because I can always make a decision then to come back in and, rebuy Ethereum and take the yield, right? Because if prices get crazy, you want to take some off the table. And that's just my personal investing strategy. I will follow this pretty closely and see what happens. Another tweet I wanted to bring up that I found relative to this was from Arthur 0x, and what he says is that with Chappelle's successful upgrade, a major technical risk of Ethereum is removed. Market can now access near risk-free denominated yield. I hate when they say risk-free, and have liquidity via liquid staking. Expect staking percentage of 15% to double from here in 1 year, and Lido capturing most of the growth. And so Lido is a Ethereum staking protocol. And the thing I wanted to bring up here that's interesting is that what he says is Lido is the greatest beneficiary of U.S. crypto's hostility, gaining market share over the past few months, effectively absorbing Binance, Coinbase, and Kraken's market share loss. Expect this trend to continue as U.S. continues to be hostile to crypto, while decentralized alternatives continue to grow. So this is interesting, right? Because you have the U.S. basically taking Coinbase and Kraken out of the Ethereum staking game. And what did that do, Ted? Did it kill the Ethereum staking game? No, it just moved it
Most certainly did
offshore.
not.
And so this is two things here with Arthur OX tweet. He basically is echoing our thoughts, and vice versa. We're echoing his thoughts on the Ethereum upgrade. But then also, this is something that, is very frustrating as a U.S. citizen, to see, and this is exactly what we were talking about when you have these actions by the SEC. It's taking this, this technology and protocol offshores, and that's not what we want to see. It doesn't stop it. It doesn't protect investors. It prevents investors from accessing yield. I mean, it does the opposite of what their stated intentions are, does it not?
It ultimately doesn't. Ironically enough, and this is a maybe this is you could classify what I'm about to express as conspiracy theorist. But as frustrating as it was to hear um, she who shall not be named other than the initials EW when she speaks, it's ironic. I mean, I don't know how else to say this, but just to say it is that it feels like these folks take this anti-Bitcoin or anti-crypto stance because they understand human nature. And any politician who's been successful, quote unquote, successful in the political career understands human nature, and they know how to use words to get people to do things. And a lot of times, unfortunately, like with children, you have to use reverse psychology with them to get them to do something that you want. You ask them to do something, they say, "No, I don't want to do it." And then you say, "Well, I don't want you to do this thing." What do? They try. I don't want you to stay out late and have a good time. What do? They stay out late and they have a good time, and then they come home and they're like, "Ha ha, I got one over on my parents." And then meanwhile, the parents are like chuckling because they understand human nature, and I just can't fathom that. And perhaps I'm wrong here, and I would whatever. It doesn't even matter what my opinion is, but I think about this sometimes. Is that we get the EWs and the Genslers and all these others and the Yellens, and they come out and say all these things, and people in large numbers shake their fists and go, "Argh!" And they end up, you know, doing this thing that they otherwise might not have been doing in the first place. Like, what if? Here's something I'll bake your noodle. Is what if all of this adoption of Bitcoin and crypto, uh, somewhat ironically, needs this enemy, so to speak, in order to light the fire under people like these banking crises. What if that's what it actually takes to drive behavior? I don't like thinking that way. I like to think that people can make good decisions and leaders would lead and they would do the right thing, but the reality is that they don't. So it's probably somewhere in between. Anyway, the point I was trying to get to is that, or one point I'm trying to illustrate here is that things like this idea of being able to stake for yield is it's beneficial to people. It's beneficial to citizens. Okay, people who here's something that people don't think about a lot. It's really easy to generalize and assume that everybody is just like you, like for you and I, like we're working stiffs in many respects. But there are a lot of folks that don't have the ability to work. I have a really good friend. His name is Steve. He's medically disabled, so he's technically handicapped. He can't work. If he works and earns income, he loses his health benefits that are provided by the state. And it's a really tough position to be in. They monitor his bank account. I mean, it's financial surveillance at the highest level because he's on government aid, and he makes and he earns next to nothing. And I say earn, I mean he receives next to nothing in benefits every month, and lives very lean because he has to. But the point I'm trying to make is that somebody like him, he can't work legally, or he loses. I mean, there's consequences, is what I'm saying. He can't go out and compete in the labor force for income. So why wouldn't somebody like him be able to participate at a small scale and learn a little bit of yield for providing a service? Meaning, I'm providing some Ethereum to the network to be able to be used, and I'm staking my claim to it here formally, digitally, verifiably so. And what about the rest of humanity that don't have the ability to participate in the labor force for any reason, whether you think it's good or not good or whatever is irrelevant? Is that real life is that there's a statistically significant number of people that could benefit from this while providing a service by offering up their token, in this case as a staked asset to be used for others, and everybody wins, quite frankly. And I just politically, I don't understand how this is an issue other than it could be perceived as a threat to the US dollar. And the fact that right now, if you want to you take your money to the bank, you're effectively staking it. It's okay to stake US dollars. You can stake any token that you want as long as it's a US dollar. And that's the posture of the administration and the authorities in this case. So anyway, sorry to ramble a little bit there, but I think it's horse pucky that the Coinbases and the Krakens of the world are getting beat up on by the SEC for providing this thing, and you'll never hear the government talk about the positives of this. It's always, oh well, we have to protect consumers from blah blah blah. That they certainly didn't protect us from FTX, which we'll get to later in this broadcast.
Yeah, no, no, I think that was very well said, and that's unfortunate for your buddy. I hate hearing stuff like that because at the end of the day, man, like we're all just humans. We're all just people, right? And we're all just trying to do what we can to better our own lives. And that's why, you know, I'm so passionate about Bitcoin and crypto because if you do this correctly, it can benefit your life, right? If you approach this market, sanely and logically and don't use leverage and just take your time to learn, you can find yourself in a position in 2, 3, 4 years where you significantly improved your financial situation. And, those are things that every American citizen has the right to do, so it's interesting to see how this all plays out. And, I think the main political thing, like you said, it could be perceived as a threat to the US dollar. I think the real reason they're being so goofy about it is I think the banks have a big problem. I think the banks, like we talked about a day or yesterday ago, their tech is not good, right? The back end of their technology can't compete with this stuff. And so, what they're going to do is they're going to lobby these politicians to delay this as long as they can. But again, it's like trying to stop the wind. You build a wall, the wind's going to go around it. And like I always say, we should, as a country, in a government, have smart regulations, right? I'm not saying don't regulate it. I'm saying, let everybody know the rules, right? Let's just let everybody know the rules so we can decide how to play the game. And, enable companies to build sales and to catch the wind, right? Because if we just let it pass, it's going to be caught by other nation states. It just is. And so, that's a whole other topic, but it gets back into, with the SEC, their stated mission is to protect investors. Well, I don't know what they're protecting me from. Better technology. Like it's like if you had, if there all of a sudden there was this cure for heart disease and you had a heart problem and the FDA, they came out and said, yeah, American citizens, we need to protect you from this new technology. We're going to ban it in the United States. And it's like, what? That this is a good thing. Why can't I get this procedure done in the United States? Well, it's for the best interest of you. It's just like, maybe that's a silly analogy, but that's kind of how it feels because
Not
it
silly
doesn't
at
make
all.
any sense. And then so I think that's a good parlay though into the news that came out yesterday that, let's see, what I got it up here. Bankrupt crypto exchange FTX has recovered $7.3 billion in assets. FTX will consider restarting its crypto exchange in the second quarter. And so what's interesting about this is this was the biggest disaster, one of the biggest disasters that ever happened in crypto. And where is this company based? Not in the US. So
Not in the. I was just going to say this would never fly if they had to operate on U.S. soil. If they were domiciled appropriately, this wouldn't even. I I can't tell you how insane this sounds. Anyway, go ahead.
Well, no,
Sorry to
I, I,
interrupt.
I'm trying. I'm trying to think about this. On the one hand, right, this is a good thing, right? They've recovered $7.3 billion of assets. Hopefully, people will get some of the money they lost back. Okay, that's a very good thing, right? That's very exciting news. And here's a crazy idea for you, Ted. You're gonna like this. Why don't they just give people their money back and not open the exchange again? Like that's a.
Because that's not the better headline. The better headline to generate to just further infect society and distract it from like what's really happening in the world is that they would, instead of giving people their money back, they would use the money to restart the exchange to try and and run the casino because they understand. What did I say earlier? They understand human behavior, and they know that the irresistible urge to speculate on, and we've said this 1,000 times, there's Bitcoin, there's other crypto, and a statistically significant portion of the other crypto assets are serve no other purpose, no other good purpose. I mean, if you can find a good purpose, I'm all ears. But the point I'm trying to illustrate is that the better headline is just that, oh, we might restart the exchange and turn on the printing press again. And ironically enough, this is just, again, this is blows my mind, is there would be people who are, you could say that they have Stockholm syndrome. They would flock back to participate and say, shut up and take my money, and continue to take the risk of it. But that's the only reason this is possible, to even say, who knows what's going to happen. If this were to happen, I can't fathom that anyone would be caught dead, although there would be plenty. It'd probably be some of the same institutional people that were like the BlackRocks of the world, who had what, 24 million. They lost $24 million in this collapse. They would be right back in there and say, "All right, guys, try and win us, try and get us as much yield as possible, and go for it." And it's just,
Well, the
I
problem is
yeah,
because the U.S. has been so heavy-handed in regulation, you force people onto these offshore exchanges that have the problem that FTX had. So the reason someone, in my opinion, might use FTX again is because FTX might have an asset that's listed on an exchange that can't be listed in the U.S. And so in that
yep,
situation, what regulation has done is it's forced people away from regulated U.S. companies to offshore companies to get a product that they want, right? And it's just it's very frustrating to think about. But my bet is if that thing reopens, I bet that people do use it. I won't use it. That, like I said, maybe you use it to transfer money, pick up an asset you can't get in on Coinbase, and then get it out of there. But I just don't. It's a big brand. People understand it. Maybe there's opportunity there. Maybe you look at it from that perspective, and that they've said the whole time FTX US has been solvent, and so I don't know if this is because you know crypto prices have rebounded, that these $7.3 billion in assets have been all of a sudden uncovered, you know. But
do you
a
trust
majority,
the math?
no,
The
no,
question is, do you trust their math? And
no.
another thing, asks. Let's do a poll. Let's go ask the normies, difference between FTX and FTX US, and see how many normies are able to tell you, oh, well, FTX was a fully regulated and compliant US-based regulated entity, and FTX.com was a offshore casino that was managed by an Excel spreadsheet and a bunch of Adderall riddled teenagers. Like, how many answers are you going to get like that? Not very many.
Well, and
Because
then and the idea that, like, hold on a second, guys, there was massive fraud at this company, and there were all kinds of shell companies set up all over the world, and you can just reopen, like, it's like a, yeah, literally the casino analogy. It's like you literally walk into this casino, you take in real money, you gamble it, and you win, and what do you get? You get fake money that doesn't exist, right? Like, and it's just like the scheme gets uncovered, and the casino has to close for 3 months, and then out of nowhere they're like, oh yeah, don't worry about it, we still got some of the money, we're just going to reopen and start the whole thing over, and everybody's just like, okay.
yeah,
It's like,
never mind all the laws that were broken and all the fraud that was committed. Never mind that participants in FTX were using customer money to go out and buy houses and boats and to fund their lives,
orgies.
and, or all of the insanity.
I
Never
don't think
mind
I.
any of that. Let's reopen, and let's trust. Let's say, shame, scam banks to fraud and whatever, whoever else, and let's we got to get this thing back open, because it really was despite how it was despite all of the fraudulent activity and all of the things that are technically illegal, but were able to happen anyway. The misuse of customer funds, the mixing of money, and the selling of paper assets, meaning they were selling Bitcoin to customers and simply just they're basically doing what the Federal Reserve does when they mark up the accounts. When they want to bail out a bank, what do? I'll use not Bernanke, but Powell's words. We simply mark up the accounts digitally at the bank. Okay, that's what they were doing with when you or I were buying spot Bitcoin on the FTX site. Our accounts were being marked up. They were taking our U.S. dollars for it, or we were swapping another asset. Sure, they were taking our assets, or real assets that we were giving them, real digital assets in that case, and they were giving us what looked like Bitcoin on the screen. But they never had enough Bitcoin to match all of the deposits that they had, or all of the purchases that customers had made. And so they were effectively selling paper Bitcoin. And and if somebody has proof that I'm wrong, I'm happy to hear it, and I'll change my tone or my tune about it. But that in and of itself is everything that's wrong with half of these operations around the world, because they're not operating with customers' interests in mind. And anyway, I mean, it's frustrating to hear that this, on top of everything else we've already heard.
Well, what's frustrating is that the SEC is punishing the good actors and letting the bad actors. Granted, look, there's nothing the SEC can do about an offshore exchange, right?
Well,
But like,
yeah.
but their actions force people into these exchanges that aren't run ethically, and so it's mind blowing. My conspiracy hat says, look, they got to get the money laundering thing back up, and they're letting it happen because they were able to launder a lot of money through that thing, and so they're just going to let it go. But look, I don't know. I'm that's just me being
Well,
cynical.
the
So
simplest and easiest path is usually the path people take. And yes, there's a lot of these offshore operations have been used by plenty of folks around the world to launder fiat money. And the irony here is this that certain crypto assets are the path of least resistance to launder pounds, yen, euros, dollars, any other fiat currency that you want to that you want to launder. And it's, quite frankly, it's been easier to do so. And it's not easier because crypto is bad. It's easier because these institutions are able to set up in jurisdiction where it's basically a free for all, and you grease a few palms. But what are they greasing the palms with? Fiat money.
well,
Okay.
yeah, and the crazy thing about this is like Sam Bankman-Fried may ultimately be right when he said, look, this thing isn't insolvent, but well, it was. But, if they open the thing back up and it starts printing money again, he's going to have to watch it from a jail cell. So, I don't know. I think it's interesting. I think we'll follow it. I wouldn't touch it with a 10-foot pole, and I wouldn't recommend anybody else do. But hey, look, maybe there's something there that is valuable. Maybe my hope is that people that lost money, and full disclosure, I'm an LP in a fund that did lose money in FTX. So look, for personal reasons, I hope they're able to recover people's assets. But also, there was a lot of people that just had money there, their own personal money that they lost, and I would love to see people get their money back. That's my positive take on all this. And
Funny
something else,
last thought on. Oh, I'm
yeah,
sorry. Last thought on
yeah.
this is that interesting that, or not interesting, and I mean interesting in a sarcastic way, that instead of the headline being, or the press release from the folks that are handling this crap show, it's not, oh, we recovered billions of dollars that we can now go and make our former customers whole. That's not the headline. It's, we're going to restart the exchange. And that is the world that we live in, folks. That's the world we live
Yeah,
in.
and the other part of me doesn't wonder if they don't figure out a way to seize the assets, but I'll try to be optimistic. Let's Speaking of optimistic, let's get to some good news that just came out this morning that Twitter is going to enable Bitcoin and crypto trading in partnership with eToro Exchange. Now, this is what we love to see. This is good old fashioned hell yes. This is a long time coming. I don't know what this is going to look like. Uh, and supposedly it's going to go. I've seen other tweets that says it's going to start enabled today. I don't know, but I don't know how interested I am in trading Bitcoin and crypto on Twitter. What I am interested is in being able to send other content creators and posters crypto payments. Maybe if you like a post, you send some Sats or send some Solana or some Ethereum to people that put out good work. I mean, I think that's huge for the platform because it incentivizes creators to, put quality product on. So I like this. I mean, I think this is a positive mood. I don't know why the other social media exchanges haven't already done this, other than maybe regulatory clarity. And Elon's kind of, Elon's Elon, so he's going to do his thing. But he also changed the partnership to X, right? So Twitter no longer exists as a corporation. It is now X Corporation. And so he has had this idea of the Everything app, sort of like WeChat in China. And so this is in alignment with that vision. I think it's interesting. I think it's a positive. We'll see. One thing I know for sure is that you will be seeing Dogecoin all over Twitter, which is annoying, but what the hell? Why not?
Hey man, sometimes you got to give people what they want, and I don't like saying that. I've had to I've learned over the years that it's sometimes it's not worth trying to swim against the current.
Sure.
And I have I have quit projects and walked away from, gracefully stepped out of projects in the past where we were, we had a particular vision, and when we brought it to market, the realization, or it became a reality, that what we were trying to do, just people just didn't care, and the prospects in this case didn't had no intention. It was in the failure wasn't in our product necessarily. It was in our misunderstanding of human behavior. And this is a common thread woven through this entire broadcast now, is that, like, understanding human nature and human behavior. So if I now, to get back on the eToro thing real quick, I think it is a positive for several reasons, and I echo your sentiment. The thing that's interesting is that it creates the ability for people to become exposed to crypto concepts, Bitcoin, Ethereum, the staples, I'll call them, and then everything else. If people want to speculate on Doge, they'll learn. And sometimes the best teacher is real world experience. And like we saw with Twitter changing the icon to the Doge, to the Shiba Inu, or whatever that dog icon is, we saw the price move up. And sometimes the basic supply and demand dynamics rear their ugly head, and that's what it takes to teach folks. And take everything you read in general with a grain of salt, and even what I'm saying with a grain of salt. But the point I'm trying to get to here is that there were some people that saw this, the human nature kicked in. They thought, oh my gosh, this is it. We're going to the moon now. But they conveniently, well, either inconveniently or conveniently, forgot about supply and demand. And they didn't think about all of the excess supply that was going to come onto the market, that already is coming onto the market anyway. Just every minute that Doge exists, there are dynamics and fundamental characteristics of that token that increase the supply by a substantial amount every minute of the day. And then when you have a pump and dump scheme, which is what a lot of people have called this move, and I'm not knocking the move, it just, Twitter, people operating Twitter can do what they want. They wanted to change it to a tulip and cause the tulip craze again. Great, they could do that. But anyway, the point I'm trying to get to is that people will get more exposure. They'll be able to dip their toes in the water, and I think that's what helps That's another feather in our cap towards greater adoption globally because Twitter is global. eToro is probably, I imagine they're global as well. They have a lot of different Twitter handles for different regions. So putting the two together, getting lots of hearts, and basically what I'm trying to like wedge toward here is that we talk about like hearts and minds a lot here. And I think a lot of hearts and minds get won when people are able to get exposure to these concepts on platforms they're comfortable with, and they they start to broaden their understanding, and then they use things like Twitter as an on-ramp or a gateway to things like eToro, and then when as their understanding develops, they may graduate to other platforms like Coinbase or Kraken or Binance or that who knows. But I guess the fundamental thread I'm trying to like weave here is simply that this is another positive for a broader adoption cycle that I think is dovetailing with the macro, and it's dovetailing with the regulatory, even though some of the regulatory stuff is stupid, but it's happening. And then we have other things like MicroStrategy World's coming up in May, and they're going to do all this awesome Lightning stuff for and it's all about the enterprise. And I mean, the list can go on and on and on. Um, and we haven't even talked about the Lightning Network yet, which we will eventually. Sorry, I didn't mean to bring it up and not talk
No, no,
about
and
it.
you've got consensus at the end of April, which I think I'm going to go to down in Austin, and you've got, a lot of these events, are good. That you can gauge a sense of the energy in the industry, and what you've seen happen over the years is these events continue to get bigger and bigger and bigger, right? And so it shows you that despite everything happening in the news, people are gravitating towards this industry. Developers are coming to this industry. Investors are coming to this industry. And with Twitter and Dogecoin specifically, look, if you want to develop a thesis that Elon Musk has massive pull in this world and that he's going to implement Doge in some form or some way, great. Like, I don't think there's anything wrong with that thesis. You might be right, but what you have to remember is even if you're right, you could still lose a lot of money because of the supply and demand and the tokenomics of Dogecoin, right? Maybe in 20 years, there's, Elon builds Doge into this big payment system. I don't think that's going to happen. I think there's very little chance of that. But what I'm saying is, if you want to put the time in, if you want to learn about supply and demand tokenomics of Dogecoin, and if you want to, in Dogecoin, believe it or not, is an indicator of altcoin growth. When Dogecoin starts to grow, you see it's just a money rotation out of large cap stock, or not stocks but cryptos like Bitcoin and Ethereum, into mid caps, into small caps, and Dogecoin could be a great indicator for that. And so I don't recommend you do that, but like, look, if that's your thesis, there's nothing wrong with that. I mean, that's what we're all trying to do. We're all trying to build a thesis of the world and figure out how to express our ideas through our investments. And I don't think that's a terrible idea. I don't own Dogecoin. There's been times in my life where I've thought, this is so stupid that you need to own Dogecoin. Like, like this, it's one of those deals, the left brain and the right brain, and then the parable. But what happens is Dogecoin is a very, very familiar name now. And people get excited when they start to see. Here's where I think people get caught is you get a big bull run up, you see all these asset prices appreciate, and they have unit cost basis, and they see, oh, Bitcoin's at 50,000, I can buy Doge for 8 cents. 8 cents, if Dogecoin does what Bitcoin does, my God, I'm going to be rich. And they don't understand that it's not even anywhere close to the same thing. But that's human psychology, and that's what we want to help people understand, is that you're better off taking the 10 grand of money that you would have bought Dogecoin at all-time highs and putting it into Bitcoin or Ethereum, right? Because over time, that's going to be a better investment most likely. Now look, not investment advice, obviously, just through years of experience. I mean, I've lost money chasing altcoins. I mean, we all have. And that you just know what happens is you learn, right? Like the SEC can't protect me from doing that. The only person that can protect me is myself, right? Like, like I made bad decisions. I lost some money, and it wasn't a lot of money, right? That's the other thing too. When you do this and you get in, don't take all of your investable money and gamble it, right? Learn this stuff first and then make a decision. And I know when I say that, nobody's going to listen. Like, you're going to have to find out for yourself, right? Like, you have any thoughts on that, Ted?
I do. I'm looking at the tokenomics, I'll call it. If you Google for Dogecoin tokenomics, you'll see some results. But here's the thing I want to communicate is that when understanding, and you're right to point out human behavior here again. This is the denominator, what was the word you used? You look at $50,000 Bitcoin, you think I can't afford it.
Unit price bias.
Unit price bias, and you look at Doge at 8 cents, and you're like, oh, I don't need to articulate it. You did exactly the thing. The point I want to point out is that the tokenomics, the supply, the way supply of Doge is created. This is literally what it says in the Google results. It says Dogecoin is not very effective at storing its value. It says each minute miners can each earn 10,000 Doge as block rewards. There is no cap on the maximum number of tokens. This means the coin has high inflation and will lose its value over time. Sounds like US dollars. It sounds like euros. It sounds like yens that are printed. But the irony here is that you at least know how much Doge is going to be brought onto the market every single day of the year. And with central banks, though, you never know. And
Right.
they may cut rates to zero tonight without any warning, and then add 2 trillion, 3 trillion, 18 trillion to the supply and make your purchasing power evaporate or cut in half immediately. You just don't know. But ironically enough, but what I was saying earlier is that as people get exposure to Doge and they try it and they get burned, perhaps they're like, ooh, and they start to dig in a little bit. They're like, wait a minute. You mean every day of the year there's another 100 million or something of this stuff that gets put into the supply pool, and then you're competing with people that were able to buy years ago, and then when they wait for these pump and dump events, they just flood, they just sell it right into the market, and boom, that's those retail newbies are all the exit liquidity that the whales need, the bigger holders need, and that's the cycle of life. And you're never going to convince anybody that you or I are never going to convince someone to look at it that way initially, unless they already want to try and understand and think of it that way. So that was kind of my point. Is I wanted to say that although I like the news of eToro and Twitter teaming up, I think it's going to be, it's going to be good for adoption. Overall, it's a good thing, is what I was trying to communicate.
Yeah, and I just with Doge, that's the important thing. Like, I didn't even realize that the supply was infinite, right? I thought that there was just an absolute metric ton of it. But the fact that the supply is uncapped is a huge red flag. The amount of money that would have to come into the Doge, it just I don't think it works, right? Like, but it's a fun thing. Elon likes it, and maybe Elon can turn it into something. I don't know. Not something that I'm super interested in, to be honest with you. But if that's something that you like and you think that Elon's a magic man and he's going to turn water into wine, go for it. But be careful when you do it, right? Like, that's the thing. Don't blow your whole load on one investment. Side note here. I had something else I wanted to bring up real quick, and then it just oh yeah, with this eToro Twitter thing, I think people watching this, be very, very careful if you're on Twitter. Don't click any link that says buy Bitcoin here on eToro. Don't do anything, like, especially early days until we see how this is going to work. There are so many scammers out there. Like, you could see something, if somebody DMs you and says, buy Bitcoin here on Twitter or any of that stuff, just be wary that there are people that are going to try to take advantage of this and to try to scam you, because it is big news and people are excited about it. So if you're on Twitter and you play around on Twitter, and also Twitter, by the way, if you're new, is great for crypto. It's called Crypto Twitter. It's still Twitter, but we just call it Crypto Twitter because it's an echo chamber, right? If you learn how to follow the right people, it can be a wealth of information. But I just wanted to just remember, just be careful clicking on anything that is relative to this, or somebody sends you a DM saying hey, buy it here. You just know that's going to happen, right? And I don't know how they stop that. I think Elon's done a better job of moderating Twitter and getting rid of some of the bots and schemes, but they're still going to exist. So just be careful is what I wanted to say. But that's all I got for today, man. Unless you have anything else.
I was just going to say, pursuant to what you just described, if someone reaches out to you first, that's usually the biggest red flag, or the only red flag you need to know about. But there are plenty of others. If they're asking you to send them money, if they're asking you to log into a website and verify your Ethereum address, your Doge address, something to that effect, just know that if you didn't initiate contact with them first, this is the best practice that I know of, and I use this almost every day when people come to me and say, help me understand this, that, or the other. And I school them in the following way. I say, the question, it's like the Howey test, but for regular people like you and I, is, did you initiate contact with them first? And if the answer is no, then 99% of the time they're scammers and they're trying to get something out of you. You just ignore it. Say, if they're asking you to buy something or asking you to verify any information, that, and you didn't initiate contact with them first, it's probably sometimes there's gonna be false positives in that framework, but the risk is way too high to not have a few false positives that get marked as negative, and you miss an email that was valid, but later on you get verification. You're able to verify outside of that medium, like outside of email, outside of Twitter, outside of a DM or a text message, outside. You call the bank, you call the bank, and you talk to them, and you initiate contact with the bank, or for example. So just ask yourself, did I initiate contact with this person? If the answer is no, it's likely a scam. And remember, do your own research on all of these things, and put your personal information, or put your own information security needs first above everything else. And just remember that you gotta look out for number one as we traverse this new frontier in the age of information, and doing things digitally and doing things across borders and things like that. So keep yourself, stay solvent, stay safe is all I wanted to add there.
Well said, buddy. Yeah, I think that's good for today. We can wrap it up there, and then this week flew by, man. Lots of news, lots of good news, lots of interesting stuff. I think we talked about Shanghai or Shapella, whatever you want to call it. I don't know why there's two names for it now, but there was a successful upgrade of Ethereum. You can now, stake and unstake your Ethereum, and you don't have to lock it up. And I'm going to play with this stuff too and see, how it works. And because this is something I've not done, I didn't never stake Ethereum. I just bought and hold. This is a very interesting, positive thing for the entire crypto industry. So, like Ted and I talk about all the time, when you get into this, you're going to see all the different tribes. Look, you want all these projects to be successful as possible for the long term, right? That we're still so early. There's infinite pie to be had by everybody. So I think this is a positive for everybody in the space, and I think ultimately will bring more money into the space because you now have Wall Street has what they love. They have a productive asset that they can park money in, and not only get a yield but get the appreciation of the asset. So overall positive. We also talked about the idea that FTX may be coming back online, which sounds absurd, but welcome to the world we live in. And then we talked about the Twitter and eToro news. Just be careful clicking on links. Be careful if you want to invest in Doge. Do your own research. Nothing we say here is financial advice. For the love of God, don't listen to us and make financial decisions. Do your own research. And we'll see you guys tomorrow.